Hey guys, welcome back to Father and Son Investing. We're going to continue our journey on the artificial intelligence review. The first video I put out was more of the bird's eye view of some of these ETFs, and then we drilled down into each one of these, each of the 6 of them. We've already done AIQ. Today we're going to talk about BOTZ, which is Global X's other artificial intelligence and robotic ETF. Now this one was founded by Global X back in 2016. The net assets are way more in this than there are in AIQ. We're looking at over $2 billion of assets under management here versus AIQ, which is only about 183 million. So we can see that a lot of people have been pouring their money into bots. What is driving this? I think there are a number of factors. Number one, I think certainly the returns. We're looking at about 46% over the last year, and since its inception, about 20% per year. But I think perhaps the real thing that is driving people to invest in this ETF is the holdings and the various type of holdings that they have. Now remember when I showed you AIQ, for that you're getting mostly companies in the United States, about 70%. With bots, you're only getting about 42% of that investment within the US, followed by Japan and Switzerland with a few others rounding out the rest. The other big difference here is the sector breakdown. Remember with AIQ, most of it was information technology. With this one, you're getting a lot of industrials, which AIQ really did not represent, and you're getting a fair amount of healthcare in this as well. If we look at the individual holdings, remember BOTZ only has about 35. All of these change from time to time, but we're looking at holdings in the 30s versus AIQ had about 80-something companies in holdings. So again, you're getting NVIDIA. That is the top of both AIQ and BOTZ, but the percentage is much more. You're getting about almost 9% of the holdings are going to be NVIDIA, and NVIDIA has been taking off when it comes to their share price. And remember that NVIDIA, which used to be really a GPU company, has remade itself into an artificial intelligence company. The other really interesting one in here is Intuitive Surgical. They are a company that makes robotic surgical equipment. Intuitive really rules the market when it comes to surgical operating equipment. Now there are some other companies who are trying to break into this field, but again, if you're looking at installation of surgical robotic systems, Intuitive is going to lead the way by far. You're getting Keyence, which is a Japanese company that makes a lot of robotic equipment. And the other interesting one in here you're getting a large percentage of is Upstart Holdings. If you're not familiar with Upstart, they are an artificial intelligence lending company that partners with banks. Now they use some deep learning to help really identify credit risk and therefore try to make these loans that get made much more credit worthy and sound. Now traditionally lending, at least in the United States, has been based off of one's FICO score to try to decide if somebody is worthy of credit. Upstart has been applying artificial intelligence just like other companies have been doing in automotive and medical and every other sector. They're applying it to the financial sector now to revolutionize lending. So what does this do? Well, their data says that it approves 26% more borrowers than traditional models, and it yields 10% lower average APRs for approved loans. So banks are getting to lend more money, and the borrowers are getting to pay less to do it. Here we can compare the top 10 holdings of AIQ and BOTZ, BOTZ, and we'll see that the weighting is much different. Top 10 holdings in AIQ makes up about 32%. The top 10 holdings in BOTZ is going to get you 2/3 of the ETF. So I actually like BOTZ. Why do I like it? Because it's very concentrated in AI and robotics. Some of these other ETFs branch out quite a bit. Remember, AIQ even had Netflix in it. You won't see things like that in here. This ETF is very concentrated down into really producers of AI, both software, hardware, as well as robotics. Let's just remind ourselves of how these ETFs have been performing since 2018. If we look at BOTZ, BOTZ, they're actually down here at the bottom compared to everyone else. $10,000 in 2018 would only have you close to $16,000 now. Now, part of that is really that they had a much more negative year in 2018 than others. Otherwise, we're looking at really nice returns. 2017, 58%, 2019, 32%, 2020, 51%. The other ETF in this category that really tries to concentrate down into robotics and autonomous technology is ARKQ. They have 41 holdings, and quite similarly, the top 10 holdings, we're looking at about 56% versus 66%. You'll see that the companies in ARKQ are quite different than the ones in BOTZ. So actually, one strategy might be investing in both of them and making comparables on value and size of the companies and momentum and quality, etc. We'll see that although the numbers vary just a little bit, the strategies are very similar when it comes to these 6 variables here. All right, so when it comes to BOTZ, am I a buyer? I actually am. I own some BOTZ. I really like the way that they have drilled down into these 36 or so companies that really concentrate on AI and robotics. I personally think that artificial intelligence, along with 5G, is going to be really the major tech expansion here in the next decade. I think that genomics obviously is also going to be another big player in terms of investing in returns in the next decade. Just some little graphs here that go along with this. The number of AI job postings is just continuously going up. The amount of corporate investing into AI is just climbing. And students are shifting their focus to AI. It says interest in networks and software engineering are fading as more students focus on AI and robotics. And those students, at least the ones who are getting PhDs, more of them are heading into industry now when it comes to using their artificial intelligence education. The United States government is also starting to put more and more of its money into artificial intelligence. I read something that said that the 116th Congress mentioned artificial intelligence 3 times more than the 115th Congress did. And when we look at the amount of money that they're pouring in here for non-military research and development, this again just keeps on going up. I hope this was helpful for you. If it was, please give us a thumbs up, and we'd love to have you as a subscriber. And don't forget to get the young people in your life investing as well. Until next time, enjoy your investing.